Hello students, let's see the continuation part of second chapter, that is capital structure, and today we are going to discuss about preparation of statement of income. So now let's see the specimen for preparation of statement of income. Here is a specimen. First we need to write sales, total sales amount you have to write, less variable cost. Variable cost includes material cost, labor cost. So if we deduct variable cost from the sales, you'll get answer, and that answer is called as contribution. Less fixed cost. Fixed cost you need not to calculate, it will be given in a problem only. In amount it will be given, and you need to deduct fixed cost from the contribution. Then the answer is called operating profit or earning before interest and tax, EBIT. From EBIT you have to deduct interest on debt, like interest on debenture or bonds or on long-term loans. So interest you need to calculate on the debt securities. Certain percentage is given, that percentage you need to calculate on the debt securities. So if you deduct interest from the EBIT, the answer is EBT, earning before tax. From that you have to deduct tax. So tax is calculated on EBT. So on earning before tax you need to calculate percentage of tax. So when you deduct tax from the earning before tax, the answer is earning after tax, EAT, that is called as EAT. So this only will become surplus profit if there is no preference dividend. If there is dividend, we have to deduct preference dividend from earning after tax. Then the answer, final answer is called surplus profit. So sales minus variable cost, contribution minus fixed cost, answer is EBIT. EBIT minus interest, answer is EBT, minus tax, answer is EAT, less preference dividend. Preference dividend percentage will be given on preference share capital, you have to calculate, and the final answer is surplus profit. Then after this we need to calculate earning per share. Earning per share formula is surplus profit. So by preparing statement of income we'll get surplus profit, and that surplus profit divided by number of equity shares. So you'll get the EPS or earnings available for equity shareholders. So whereas without preparation of income statement you can prepare EPS. You can calculate EPS, that is when EBIT is there, means till EBIT you can calculate, you need to calculate till EBIT, that is sales minus variable cost minus fixed cost, you will get EBIT minus I. I stands for here interest, minus interest on debt into 1 minus T. So 1 minus tax, for example it is 50%. So here you have to write 0.50 like that, 1 minus T minus P. So here P stands for preference dividend divided by number of equity shares. N stands for number of equity shares. So now let's see the first problem. Here is the first problem. Olympus Opera Limited has a total sales of 10 lakh. Variable cost comprises material cost accounting for 20% of sales. So variable cost we have to calculate here. Variable cost includes material cost. Material cost is 20% of sales. So total sales is 10 lakh. 20% means 20,000. So 20,000 is material cost, and labor cost accounting for 40% of sales. So sales is 10 lakh, 40% means 4 lakh. So here material cost 20% of 10 lakh means it is 2 lakh, okay, not 20,000, it is 2 lakh. Fixed cost amounts to 2 lakh, so it will not change. Fixed cost means it is fixed for all for any changes. Calculate EBIT. So they have asked to calculate EBIT. The company is apprehensive of any of the following developments. So there may be changes, that is 20% decline in sales, 10% increase in material cost, 20% increase in labor cost. Estimate the effect of each of these developments on the operating profit. So we have to calculate operating for the normal situation and for the changed situation, for different situation. So what is a EBIT that we have to calculate? So let's go for this. Here is a statement, particulars. First column is for existing level, that means there will be no changes. For same level, what is a EBIT? And when 20% decline in sales, what is EBIT? Then when material cost increases by 10%, so what will be the changes on EBIT? So to calculate that, we need this column. And when there is a 20% increase in labor cost, what will be the effect on EBIT? So to calculate that, we need last column. So first, as per specimen, we have to write what? Sales. So in a problem, what is the amount of sales given? It is 10 lakh. So total sales is 10 lakh. And for second situation, when there is 20% in decline in sales, so total sales 10 lakh, it's a 20%, means 2 lakh. So 10 lakh minus 2 lakh, when sales reduces by 20%, then sales will be 8 lakh. Then 10% increase in material cost. Illi material cost ge affect agtade, so there will be no effect on sales. Sales will remain same, that is 10 lakh. Illi kuda labor cost increase agate, so there will be no changes in sales. It is 10 lakh only. So from sales, what we have to deduct first? Variable cost. We have to deduct variable cost, less variable cost. Here variable cost includes material cost and labor cost. Material cost is 20% of sales and labor cost is 40% of sales. So we'll calculate this. So material cost 20% of sales means it is 2 lakh. So there will be no changes in existing level. So as it is, you have to write it is 2 lakh. And second situation, 20% decline in sales. In second situation also, ಇಲ್ಲಿ changes ಆಗೋದು ಸೇಲ್ಸ್ ಮಾತ್ರ. ಸೊ ಹಾಗಾಗಿ ವೇರಿಯಬಲ್ ಕಾಸ್ಟಲ್ಲಿ ಯಾವುದೇ ಚೇಂಜಸ್ ಆಗೋದಿಲ್ಲ. ಇಟ್ ಈಸ್ ಸೇಮ್ 2 lakh. Here 10% increase in material cost. So material cost is 2 lakh and it is increased by 10% in the third situation. So 2 lakh into its 10% means it is 20,000. So add the existing material cost 2 lakh. So 2 lakh 20,000 will be the material cost for third situation. And here increase is done with regard to labor cost. So no changes in material cost. It is same 2 lakh. Then labor cost, it is 40% on sales, means 4 lakh. So for existing level, it is same 4 lakh. And for second situation, there is a decline in sales, so no changes in labor cost. And third changes is with regard to material cost, so it will not affect labor cost. And the last 20% increase in labor cost. So now we are doing what? Labor cost calculation. So 20% increase. That means 4 lakh into 20%, that is 80,000. So 4 lakh existing labor cost plus increased labor cost, it is 80,000. So total 4 lakh 80,000. So when you deduct sales variable cost from sales, the answer is contribution. So contribution 10 lakh minus 2 lakh minus 4 lakh. So it is 4 lakh. 8 lakh minus 2 lakh minus 4 lakh. 8 minus 6, it is 2. 10 lakh minus 2 lakh 20,000 minus 4 lakh. So 10 lakh minus 6 lakh 20,000, it is 3 lakh 80,000. 10 lakh minus 2 lakh minus 4 lakh 80,000. So 10 lakh minus 6 lakh 80,000, it is 3 lakh 20,000. So we are done with the contribution. Next, one more step to deduct fixed cost. So if you deduct fixed cost from contribution, then the answer is called EBIT. So only we need to calculate till EBIT. Fixed cost is 2 lakh. It will not change for any level. So for all the 4 situation, it is 2 lakh only. 2 lakh, 2 lakh. So now earning before interest and tax or operating profit for existing level, it is 2 lakh. For situation 1, it is nil. For situation 2, it is 1,80,000. And for situation 3, it is 1,20,000. So now you can see that what is the changes that are happened in EBIT when there is changes that are took place in sales and variable cost. See, when sales is 10 lakh, that time EBIT means operating profit was 2 lakh. When sales reduces by 20%, that time there will be no operating profit. Profit kuda kadme agutte. Sales kadme adaga profit kuda kadme agutte. Then when there is an increase in material cost, so increase in material cost 10% increase ಆಗುತ್ತೆ, 20,000 material cost ಜಾಸ್ತಿ ಆಗ್ತದೆ. So that time operating profit comes down to 1,80,000. Profit ಕಡಿಮೆ ಆಗುತ್ತೆ, 2 lakh ಇದ್ದದ್ದು 1,80,000 ಆಗುತ್ತೆ. So ಲಾಸ್ಟ್ ಸಿಚುವೇಶನ್ ಅಲ್ಲಿ ಲೇಬರ್ ಕಾಸ್ಟ್ 20% ಜಾಸ್ತಿ ಆದಾಗ ವಾಟ್ ಈಸ್ ದ ಚೇಂಜಸ್ ಆನ್ EBIT? ಸೊ 4 lakh ಇದ್ದದ್ದು 4,80,000 ಆಗ್ತದೆ ಲೇಬರ್ ಕಾಸ್ಟ್. ಸೊ that time profit reduces to 1,20,000. Thank you. Next, few more problems will work out in next class.